Breaking news today. 1. OECD warns the Iran war is hurting global growth. The OECD said the Middle East war has damaged the global economic outlook. It now expects slower world growth and higher inflation in 2026, mainly because of energy disruptions and rising shipping risks. The group warned that if the conflict lasts longer, both consumer prices and business costs could rise further across major economies. Oil prices stay elevated as Iran talk signals remain mixed. Oil prices remained under upward pressure after conflicting US and Iran comments on possible negotiations. Traders are still worried about supply disruptions and instability around key shipping routes. With energy markets tight, investors are pricing in the risk of another inflation wave if diplomacy fails to calm the region. 3. US Treasury market volatility jumps on oil shock. The US bond market has become more volatile as the oil shock changes expectations for inflation and interest rates. Investors are struggling to decide whether the Federal Reserve will stay cautious longer. Treasury yields have reacted sharply as markets reassess recession risks versus renewed price pressures. 4. US import prices post biggest rise in nearly 4 years. New data showed US import prices rose at the fastest pace in almost 4 years in February, largely driven by higher energy costs. The report adds to concerns that imported inflation may stay sticky. It also strengthens the case for policymakers to remain careful before cutting rates too quickly. 5. Fed remains cautious as inflation risks stay high. The Federal Reserve has kept interest rates unchanged and continues to warn that inflation remains a concern. Officials are watching how war-related energy costs may affect consumer prices, business activity, and future growth. Investors are now focusing on whether the Fed can still deliver rate cuts later this year. 6. U.S. business activity slows to an 11-month low. A fresh S&P Global survey showed U.S. business activity slowed to its weakest level in 11 months. Higher costs, weaker confidence, and geopolitical tension are weighing on firms. The slowdown suggests the economy is losing momentum, even as inflation pressures remain uncomfortable for both consumers and policymakers. 7. Europe's economy is close to stalling. Eurozone business activity is close to stalling as war-related energy pressure and inflation concerns hurt confidence. Companies across the region are facing slower demand and higher input costs. The weak outlook raises pressure on Europe's policymakers as they try to support growth without reigniting inflation. 8. Germany prepares economic retaliation tools for a future Trump clash. Germany is reportedly preparing plans to target U.S. companies if trade tensions with Donald Trump escalate again. The move reflects rising political and economic anxiety in Europe about another period of aggressive U.S. pressure. Investors are watching closely because renewed transatlantic trade conflict could hit multinational stocks and supply chains. 9. Trump's approval drops as fuel prices rise. A Reuters Ipsos poll found Donald Trump's approval rating has fallen to a new low as Americans react to higher fuel prices and broader economic stress. The result shows how quickly energy costs can influence public opinion. Political sentiment is now becoming another factor investors are watching in U.S. policy and market expectations. 10. Investors are moving back into cash. Many investors are shifting from stocks and bonds into cash as geopolitical and inflation risks rise. The move reflects a defensive mindset, similar to periods of major uncertainty in previous years. Portfolio managers are prioritizing liquidity, safety, and flexibility while waiting for clearer signals from energy markets and central banks.